Time now for our Wall Street Week Daily segment. The host of Wall Street Week, David Westin, joining us as he does every day at this time. And David, we've been talking all week about the big meetings down in Washington, the IMF and World Bank meetings. We've kind of seen what's gone on publicly, but there's a lot going on behind the scenes
and
as well.
The G20, the G7, there's an awful lot of activity. We're drawing to the end of it finally after a long week of this for us, Romaine. And we're going to turn down to somebody who really knows this terribly well. She's Afsaneh Beschloss. She's Rockcreek founder and CEO. Of course, she was a senior executive, actually, with the World Bank during her career. Afsaneh, thank you so much for being with us. So let me put it back on you. You always know what's really going on at these meetings as opposed to what we're reading about. What's the real talk about? What's the hottest topic this week?
So, David, of course, in Washington today is the commanders, as you know, the news about the commanders.
Of course, yes, of course, yes.
Were you part of that bid?
Yeah, are you part of that syndicate, Afsaneh?
Unfortunately not. But in terms of more related to the subject at hand, really two or three things. I think the biggest topic, which has not been noticed by many, is that Chinese debt is a huge amount of total debt. Let me just put it in perspective. 300 billion total global bond market. About 100 trillion of that is emerging markets. About 50 million of that is Chinese debt markets. Another 100 is emerging markets ex-China. China has been loaning to emerging markets in very large sums over the last 10 years or so, as everyone knows. And in the recent past, China had said that as a number of countries are having problems with paying back their debt, China would expect that institutions, multilateral institutions like the World Bank, like others, would also have to eat part of this debt. This was a no-no in multilateral land because multilateral capital structures are based on being lender of last resort, but also their loans getting paid. Otherwise, they have to maintain their AAA rating. Right. So the Chinese, even though in the roundtable that was yesterday did not come to an agreement, the messages that are being sent with the planned workshop and other things that we're hearing imply that there might be some sort of agreement, which is actually more than what people expected going into the meeting.
So, Afsaneh, let me just jump in, because we've heard about that. There might be some sort of agreement. Actually, we had David Malpass, the outgoing president of the World Bank, hoping there'd be a memorandum of understanding. My impression, though, is it's not actually going to get done. Is that wrong?
You're absolutely right. So it won't get done, but the fact that they've sort of slow walking it is a big positive, because until a few weeks ago, the conversations were very negative. And a number of meetings I've had here with a number of senior Chinese officials and others who are working closely with them would lead me to be hopeful, but not for necessarily this meeting. If it happens this meeting, it will be a very pleasant surprise for all of us.
A lot of folks in the market right now are looking at this, and you hear a lot of people talking right now, Afsaneh, about the idea that this would become the template for other middle market and poor nations should this deal actually, at least as we know it to be, actually make it through.
I think yes and no. There used to be the Paris Club, as you remember, that was just the one standard. I think now you have so many different players in the markets, just like what we're seeing with the Chinese. So it will definitely make it will create a new standard with more people around the table compared to the Paris Club that had, basically G7 type members around the table. I think in that way it will be a change, but I think there's just so much other debt that needs to get restructured. You will see other formats as well.
Has there been any talk down there this week about the transition of leadership at the World Bank, not only the status of it, but more importantly, whether we could see a little bit of a new direction for the bank once they do get a new leader?
Absolutely. I think with the change at the World Bank, you also had a recent change at the Inter-American Development Bank that works in Latin America. I think you're going to have a much more dynamic institution. That's what at least I hope. And I think the choice of Ajay was a very inspired one. He understands that you have to have AAA rating, but I think he is very clear that the size of lending that the World Bank had in the past has to increase by a lot. And that is internally improving its financial structure, but also working much closer with the private sector. But more importantly, you need to also change the way these institutions do business. For example, getting a loan from the World Bank takes 7 years on average. As we know, if you go to get a mortgage loan, it takes a few weeks in most countries. So you do need to improve that. Obviously, a lot of work needs to get done, but maybe go down from 7 years to 6 months or 8 months or something like that. But there's a lot of changes that could get done that would get a lot of work that we're also hearing about in Washington on hopefully more investments in climate to go ahead, but faster than it has in the past. So more positive.
Afsaneh, I watched that fireside chat, if I can call it that you had with Ajay Banga. It was fascinating. He has a very ambitious agenda already, even before he's taken the job, what he wants to get done. Can he do that with the existing capital structure? He says he wants to get creative in using balance sheet. Is that doable? You know it terribly well. You were treasurer there. Or are they going to need more capital?
I think they can do a lot more with the existing capital. It's always better to get additional capital, but I think with the existing capital, a lot can get done. And then, if you show good work, you can always go for additional capital. But let's not forget, you also have huge resources going into Ukraine and the war and the development of Ukraine by the same countries that are the same countries that would have to give additional resources to the World Bank. And there are many, many other areas that need assistance. So the World Bank capital increase this time will be probably much harder. I think he will have much better chance with some other things he mentioned and that I've been talking about, which is really bringing financial inclusion. Let's not forget the local bond markets in these countries are close to $40 trillion. So let's get those, in better shape. Let's clean them up. Let's get them, more organized so that they can start investing alongside some of these multilateral institutions, as well as the rest of the private sector.
When you hear from Ajay Banga, as you have, he talks about trillions of dollars to go for climate, as well as for education, as well as for opportunity, equality, things like that. He has to have private capital today. He can't do it just with public. What does the World Bank need to do to make this attractive to private capital?
So, David, I think one of the things that I have learned is really take the word trillions out of my vocabulary, because I think what has happened is this whole, all these meetings the last many years has been about going from billions to trillions. And instead, these institutions have gone from billions to millions. So I think I would be less about how many trillions are needed, and I would be much more about what the execution capacity of the multilaterals are, but also the execution capacity of the countries. And then, as you said, of course, working in a blended way, taking some of the risk away for the private sector. Don't forget, private sector actually has been on the front of reducing investments in emerging markets. Right now, in these debt markets, for example, only 16% of local debt markets are held by foreigners, much lower share than used to be the case. So you need to start de-risking a little bit for the private sector to come in, maybe create really interesting climate-related renewable energy projects that generate revenue, if you're selling power, you can sell that in the markets in these countries, get paid, and the private sector can get paid, and the bank can help reduce the risks of operating in these countries.